I'm a teacher I'm a teacher in M1. I'm putting away 15% into my 457 all target date. That's through Voya. Should I drop down a lower percentage and open an account on the side, VTSAX? That I definitely want to talk about. So can I answer that, JJ, before we
Yeah,
get to the
go ahead.
brokerage scene?
Can you answer that while I run to the bathroom real quick?
Yeah, you can walk to the bathroom. Those stairs are
Okay,
steep.
go.
Those are
They are
steep
steep.
stairs. So there's a couple different things, and this is not financial advice when it comes to retirement. I pride myself on how much education I have when it comes to retirement accounts. So please keep the retirement questions coming. Number one, I'm not a huge fan of Voya. They're an insurance company, and generally their fees are way, 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 way high. If you have a 457B, the difference between the 403 usually going to get a bunch of options. A 401k, you pretty much get the one your job chose for you. So the 403, you usually get some options. 457, because they're so rare, they're limited. So if Voya is like the only choice you have, okay, that might be something that you need to just suck it up, because even though the fees will be high, they're probably going to be low enough where they make it worth it, especially with the 457. The 401k and the 403b, maybe not. Target date funds, love them. I'm a huge fan. I will say this about target date funds. They are outstanding for people that don't want to do the back end and don't want to worry. All a target date is that company says, I'm going to tell you for what your age is, what the appropriate ratio of stocks to bonds is. That's it. You say, I'm going to retire about this year. They predict about what your age is using 63 as retirement age. And they say at this age, you should probably have this allocation. And I know Vanguard's, because that's where I looked into it. Vanguard's doesn't start to change until you're like 40 something. So if you sign up for a target date fund in your 20s, you're going to have the same allocation the whole time, but they do put bonds in there. So I will say this about target dates, not against them. Generally, what I'll tell people if I'm consulting is to consider, because once again, this is not financial advice, consider moving your retirement date out past what you think you're going to retire at so that it's not a little bit too conservative. They tend to be a little bit too conservative on the bond side, in my personal opinion. And you can take a look at it, like look at their retirement date age. And because they don't care when you're actually going to retire, they're using that as the day that you're saying that you're going to be 63. So if you want to be a little bit more conservative, you can move your retirement date closer. If you want to be a little bit more on the risk side and a little less conservative, you can move your target date out. That's far as that. As far as 15%, I'm never going to tell anybody 1 to 100%. You put in what you can. The 457 max is 19.5. Obviously, I want the goal to be to increase that every quarter or every year till you can get to a spot where, like I said, at this point, years in, I don't even miss it from my paychecks. I took so little that like I did every time I did my grades, every marking period, 40 weeks. So I would do my marking period and then I would just raise it up by, I think I did 10% increase. So if you were putting in $100, the next quarter I put 110 in, et cetera, et cetera. And I learned how to live without that $10. And because it's tax deferred, it's not really $10 because there's taxes, whatever. But those are the things you need to think about. What are the fees for Voya? Is the target date fund a little bit conservative for what your needs are? And if you're doing stuff in your brokerage account outside of that, and this is kind of just your foundation, I'm for target dates. If you don't want a target date, just go with an index. Voya will definitely have some sort of S&P 500 index for you. Just don't go actively managed. Always go passively managed. And I love M1 Finance because it's set it and forget it. And like I said, drop down that percentage, open a Vanguard account. I don't necessarily, as we're going to talk about, and this will be a good transition into that.